themselves. Sorry, we've lost two panellists tonight. Mason Border from TokenSoft got stuck in New York, and Jamie Finn from Securitas couldn't get a babysitter and his wife's travelling. So these things happen, unfortunately, but we've got some really great panellists tonight. I'm sure it's going to be good. Thanks, Mark.
We do. I'm Mark Albertson. I write for SiliconANGLE, covering the technology world. And why don't we just go ahead and get this started? Let's have each of our panelists tonight just say a few brief words, introduce yourself and the businesses you're with. So, Mike, why don't we start with you?
My name is Mike Saiko. I'm the head of sales at CoinList, where we're the best digital assets to go to run token sales, and now, announced last week, also find secondary market liquidity. So we launched an exchange last week, so that's big news.
Josh, there you go.
Yeah, congrats on that. My name is Joshua Rivera. I'm the General Counsel at Blockchain Capital. We are a venture capital firm that invests exclusively in the blockchain and crypto industry. We manage $250 million in assets across 4 funds. We've been in this space for about 6 years. So, I always like to say that because we weren't a product of the 2017 kind of ICO boom. Not that there's anything wrong with people who were a product of that, but we've had the benefit of seeing multiple market cycles, downturns, bull markets, and so we like to think that we have maybe a better kind of bird's eye view of the space. But yeah, we invest in every vertical in the space, and we invest at all stages, and so right now we're very focused on building out the infrastructure. We're really looking forward to what the future holds.
Hi, my name is Andrea Lowe. I head business development, sales, and partnership at Harbor. Harbor is a platform for alternative assets. We provide kind of the end-to-end life cycle of onboarding investors, managing investors and their cap table, as well as providing a private marketplace for liquidity. So we're best known for dealing with real estate and kind of digitizing that so it's more liquid. But we just announced getting a broker-dealer license as well as transfer agent license, so we're very excited about kind of additional services we can provide our clients.
Also, I just want to mention, sorry, Tegan, but each of these are portfolio companies of ours, so it's cool to be here and see our little kids doing their thing. Go ahead.
Yeah, I'm Tegan Klein. I head up international business development and investor relations for Orchid. And Orchid is a decentralized VPN built on top of Ethereum, and it is essentially backed by a marketplace for bandwidth. So we're really trying to kind of open up the internet to everyone so that everyone has equal access, equal opportunities.
All right, excellent. So let's go ahead and kick this off. The title of this, of course, is The State of Tokens. So let's talk about the state of tokens. What's the perspective that you see in the space right now, currently, and looking forward to 2020? What do you see in the year ahead?
Yeah, I think that layer 1 is still kind of really being built. It really hasn't been that long that blockchain has been alive, and I think that as we kind of lay the foundation for the layer 1 ecosystem, we will see a lot more applications built on top of that. I think that Ethereum, a lot of the applications on Ethereum are really going to start to come to fruition in early next year, and I'm really looking forward to that.
My perspective is more from tokens and security tokens, and since I joined Harbor in early 2018, there's just been a schizophrenic view of where tokens are going. First, the trend was around ICOs, then everyone wanted to do STOs, and then everyone wanted to do IEOs, and there's all kinds of permutations coming up. But what I'm most excited about is I think the hype is starting to die down around these instruments. No longer is it a world where if you yell token or ICO, does money kind of rain from the sky? I think people are starting to really think about, okay, ask the hard questions, does this technology actually have present day applications. And so what we've seen with tokenization, for example, is people are again steering away from expecting large sums of capital to come in the door just by having a token, but now it's more about, okay, what does that tokenization allow them to do? Faster settlement, enhanced liquidity, automated compliance. And so every day I'm talking to more financial institutions, traditional players that have capital and assets that are actually exploring tokenization for the right reasons. So I think 2020 will be slow but steady progress. More traditional players tokenizing bonds, debt, expansion beyond just blockchain projects, to more real estate, private debt, private equity, kind of using these tokenized formats.
I'll speak from the lens of CoinList. CoinList is traditionally always focused on what you describe as a utility token or network token. So I can't speak as much to the security token market, but a lot of money came into the space in late 2017, 2018, and most of that money went into investing in infrastructure protocol tokens. So what we're seeing now is most of those teams raised in a white paper and a dream, if you will. And now they're getting close to launch. So if you look into the early part of 2020 and even the end of the year here, a lot of those top projects that were well-funded, well-capitalized, are getting ready to ship their mainnet. So our expectation is that a number of these teams will ship. That'll be very exciting. We'll get to see how they actually work and operate in the wild. And as some of these different token models play out, you'll begin to see, well, who are potentially the winners and who are the losers. And when that happens, you'll see more investment dollars go into double down on the networks that actually are paying dividends.
Yeah, it's actually particularly interesting to be on this panel with these panelists because they kind of represent the spectrum of views on tokens. So you've got Tegan with Orchid on kind of the one end is like very pure blockchain, thinking about tokens as bearer assets. And you got Harbor kind of on the other end where you're thinking about tokenizing assets that already kind of exist in the world and using tokenization as a representation of those assets. And you got CoinList that kind of facilitates the one, and had we had Securitize and TokenSoft here, they would be kind of closer on the hardware end of things. So I think it's great, and I kind of get to be neutral and say everyone's cool, but also maybe pit each other, pitch you guys against each other. We'll see if I can do that. But personally, I think that it's a big world, and there's space for a lot of innovation. We are definitely interested in how layer ones continue to develop. I think what you said, Tegan, at the beginning, that we're still in early stages of the development of the technology is 100% true. We feel like we're in the very early stages of the internet. If you remember kind of early 90s internet, if you were an engineer or a friend of yours had a parent who was an engineer or whatnot, you might have seen the early kind of iteration of the internet, and it was dial-up, so it was slow and clunky and weird. It made noises, just all kinds of different things that were going on, and you probably weren't sure how you would monetize it. And so we feel very much like layer ones represent that. And so we're excited to see really, really smart teams iterate on that. It's hard to back a horse in this one though, in particular, because I think over the next 12 to 18 months, there's something like 13 layer one protocols coming online, including Orchid later this month. And they all kind of do different things or claim to have different advantages over others. I wonder, are we going to live in a world where there are 8 or 9 different successful blockchains and you use the digital assets associated with each chain kind of for very specific things? So I don't know. So, but I do think that, in the same way that these mostly open source projects that are looking to attract developers as they continue to build, we're going to see some really interesting creation of opportunities to create applications and uses for these things. And then briefly on the security token side, look, there's an incredible opportunity to really fix, in particular, the clearing settlement aspects of our capital markets. that's a mess. I mean, you can think about DTCC and transfer agents and all the different kind of like rent seekers that exist in the middle of our clearing settlement space around the world. Blockchain technology is a really great opportunity to address those issues and the inefficiencies of those markets. Congrats to Harbor that secured a transfer agent license the last couple of weeks. Securitize also was able to secure the same thing. And I think that what we're seeing is when you look at the traditional financial space, we have the right teams and the right players that are going to be able to really bring the inner workings of that space into the future using this technology in exciting ways. And it's good that we're not distracted by high volumes and high prices of assets, and we can kind of focus on building.
Tegan, do you want to add something?
I answered, but yeah, I think that's right. It was interesting to see, I guess, a while ago after the ICO craze, a lot of people moved towards security tokens, and they thought STOs were the new wave. But the problem was, because utility tokens had so many regulations against them, and the problem was that there wasn't a liquid market for security tokens to trade because you needed a broker-dealer's license in order to trade them. So now we're finally at a stage where that broker-dealer license, those are getting acquired. And I think that trend is going to kind of come back, and I think that's really exciting. Obviously, the regulations are very high when it comes to security tokens, but the fact that we can kind of tokenize securities is a really, really exciting wave.
So Andrea, you talked about money falling from the sky. Well, let's try this out with the panel. Let's say it did fall from the sky, and you each got $500,000 to invest in tokens. Where would you place that money?
That's a great question. I think what's interesting is a lot of people say things and then don't put their money where they say they're going to put the money. So I would have to answer it very personally, and I would treat it as my own capital. I also think when you're investing, it kind of follows like the Maslow's hierarchy of needs. If you're really rich, then you have a different profile, right? But when you're at the low, when you're just building wealth, you're not going to be as open to risk. And so if you look at my personal money, it's mainly real estate, mutual funds, some Bitcoin. But on top of that, where would I invest? I would invest where I understand and is aligned with my current risk appetite. And so I'm very pro security tokens and what we're doing at Harbor, but for example, currently we have some real estate debt secondary on our platform that's paying 10 to 12% yields. And what I think is really interesting about this is secondary. So in theory, non-accredited investors can participate. And the second thing is, because this is secondary, there's more data that exists on that investment. So you can see, has this issuer been paying dividends? Have they been progressing how they say they are? And in a way, it's quite de-risked. And so if it's debt, you get paid back and you're getting paid 10 to 12% dividends. Where can you get that kind of return right now? I think if you're looking at, I think CoinList is doing staking now where they're paying 5% on certain cryptocurrencies. I think the Dinwiddie...
Coinbase.
Oh, sorry, Coinbase, sorry. I think people on the other extreme are looking at tokenizing sports contracts. Dinwiddie is paying 2.5%. And so getting that kind of yield is pretty good in my opinion. And then the other opportunity I would say is I would look at secondary. I think people are kind of bearish on certain aspects of different projects right now, and so there could be a real opportunity to kind of buy low and then sell high with that, looking at a company's track record or a project's track record. So that's where I would be.
I don't think I'm allowed to offer investment advice, so I'll pass on that one. But what I will say is one of the best things that you can do in this space is everyone says do your own research. I think that is important, but there's so much of an education that goes into learning about any of these blockchains, and I think it's much better to go deep on a few as opposed to trying to spread things around. And when I say that, not just understand it, but actually participate. All of these networks require that there are network participants, not just a bunch of hodlers. So that means running a validator node, participating in governance. These are all important things to make the network thrive. And if you're just holding your tokens in a wallet, it might not actually thrive and be successful one day. So actually being a contributor to the network is one of the most important things you can do in making it make the price go up.
As the resident investor on the panel, I will say this is not investment advice, but I will tell you. Yeah, I think you were charitable in how you gave your thoughts. I would personally buy Bitcoin, and I get to say that with the benefit of having written each of these guys a check. So already, but I mean, that's not to say that I don't believe in tokens. I do. Right now, I think what we've seen is the most demonstrated use case in the space is Bitcoin. So we're still really excited about it. But if you gave me more money, then after having secured I mean, you want to be an LP in our fund, we're happy to take that. But having kind of secured a good position in Bitcoin. Look, it's really kind of going back to what I said earlier. It's difficult to pick kind of a winner for layer 1 protocols. It's also difficult to pick like a winner for security tokens, right? Like, when you think about it, at the end of the day, investing in security tokens is really just investing in the issuer, right? Because they just represent the equity that the issuer, or whatever other type of instrument the issuer is kind of responsible for issuing. So what we try to do really with all of our investments is, and Harbor and CoinList are particularly good examples of this, is we try to take horizontal positions in markets where it's difficult to pick a clear winner. So, and you guys are kind of the exception where like we picked, we bet on a team, Seven's an excellent entrepreneur, a lot of knowledge in the space and experience. And so, we do from time to time bet the jockey. But in general, we like to back teams that are going to touch many opportunities to benefit from value and growth in any given space. And so somebody like CoinList is touching a lot of layer 1 protocols. Harbor, that's working on the kind of inner workings of security tokens in general. That the hope there is that they're going to be a part of the future going forward, regardless of the success or failure of any particular token issuer.
Yeah, I'll preface this with this is not investment advice. I kind of am a purist when it comes to the values of blockchain. I really like to look for things that kind of echo the values of Bitcoin, which is it open source money? Is it permissionless? What does that mean? It means you don't have to ask permission to join. It's very open. Things like that. And so I would say, and I also I'm more of a long-term investor, so I like to kind of buy and hold and bet on things that I really believe in. So things like self-sovereign identity, things on like opening the internet to everyone, digital rights, human rights, things like that. And I would also say bet on things where decentralization actually matters. In a lot of cases, it actually doesn't matter, so.
All right, so one of the hot topics kind of surrounding the token space has been the regulatory issues. And when I was doing some research in advance of our discussion tonight, I noticed that early in October, the SEC obtained a restraining order against Telegram over the sale of the Gram token. And their claim is that Gram was a security and needed to be registered as such. So my question is, do you agree with the SEC's position on this? And if not, why not?
So I am not going to answer the question because I don't have knowledge of all the facts. I know what the SEC alleges that Telegram did, and we're waiting to see what Telegram's going to respond. Their lawyers did respond later, a few days later, saying, we disagree, we think that you've misrepresented us in a number of ways. What I will kind of say is, I think it's very interesting, what we saw just a few weeks before that was we saw Block 1 enter a settlement with the SEC over the sale of the original EOS token, the ERC20 token. And it's interesting because we had seen a number of actions from the SEC leading up to that, where the SEC essentially said, look, when you sold your tokens, you did so in a way that was incorrect, so here's your penalty. We're gonna give you make you pay a nominal fine, usually like $200,000, $300,000. We're going to make you offer rescission. So anybody who purchased in your token sale gets to get their money back if they want to, and then we're going to make you register as a publicly reporting company, basically saying these tokens that exist out in the wild are still securities and they're under our jurisdiction as a regulator. That did not happen with EOS. With EOS, the SEC said, we're going to make you pay a lot of money, $24 million, which is pretty astounding as far as a, I'm getting there, too, I'm getting there. It was pretty astounding in terms of like total like dollar value. But when you think about how much Block One actually raised in their token sale, it was $4 billion. That's actually less than 1% of kind of the raise. But more significantly, I think to the regulatory question is, they did not have to offer rescission, and even more significantly, they did not have to register the tokens as securities, which essentially kind of means that the SEC tacitly acknowledged that one of two things is true. One, there's nothing they can do about the tokens now that they're existing on the wild, or two, they do not believe that the tokens as they exist today are securities. So that's really interesting. Now, they took a completely different approach with Telegram, where they said, look, if you distribute these grams, they're going to be securities. And so we're going to stop you from doing that. Maybe because if you do that, then they will exist out in the wild and we won't be able to actually rein them in after you've sold them. Or maybe because, based on the facts of the case, they actually believe that grams are securities and not utility tokens.
Yeah, I think another key point that came up in some of the findings from the Telegram incident, if you will, is that there were only, I think, maybe 120 to 150 investors in the sale. They were all large checks that were written, and that the SEC might actually have been trying to protect the downstream investor of those initial staff round investors, because I believe there were some emails that were sent out that the plan had been all along by, let's say $1 million block, and then you can dump it on the market once it's liquid. So the SEC, because the mainnet had not shipped, Genesis block not been mined, was able to step in and prevent it from actually getting out into the public markets, versus EOS, like the damage, whether or not you think it's damage, had already been done. It was already out liquid on exchanges for too long for them to actually reel anything back in.
Andrew?
I'm going to agree with the SEC. We're a bit more conservative, and hence we've been able to kind of prove that in getting all of the licensure, and so we tend to be more conservative. When we first came out, we were pro security tokens. We thought everything was a security token, and that hasn't changed.
Yeah, I echo a lot of the views on the panel. I think that a security is a security, and if you're trying to tokenize something that's a security, then it's obviously a security. If you're not doing that, then it's not a security. I think that cryptocurrencies are an entirely new asset class, and oftentimes we kind of forget that, and we need a new kind of classification for them. I think the problem with Telegram is that it's not decentralized enough, and that we don't really know who has the control of that company. Is that Russia? It's not clear, and I think that is part of the problem, and that is part of the reason why it was kind of deemed a security by the SEC.
What I will say, just to close, I think it's very exciting to see what will happen, because Telegram, represented by very distinguished law firm Skadden, if there were a firm to kind of represent me in a securities suit against the SEC in the Southern District of New York, they'd definitely be among the ones that I'd consider if I had the money to pay them. I also think that they have a reputation to uphold, so it'll be really interesting to see how they employ their resources to addressing this suit. And kind of what is really exciting is a federal judge will have to decide on this issue and draw lines that will say, give us perhaps better, clearer guidance than we've gotten from the SEC lately. So it'll be a fun one to watch, one way or another.
So you all did a good job of capturing a lot of the chaos that surrounds this issue, at least in the United States, but there are other countries around the world, Lithuania is just one example, who've issued some fairly specific guidelines around tokens. What does the international picture look like? What are you seeing in terms of markets internationally where there's a favorable climate or you feel there's good business opportunities outside the United States? Who wants to start? Andrew? Go ahead.
Sure. So I'm going to speak more from a security token standpoint, and I think there's been a lot of interest from Asia, Japan. I think Hong Kong today just announced how they were going to regulate crypto exchanges as well. China's doing its own thing. There's a lot of money there. I'm also quite intrigued by kind of Europe, specifically the UK. I spent some time there, and I think that they've always been quite forward-thinking in terms of crowdfunding, real estate. Their government's quite supportive. So I've had an uptick in talking to financial institutions and issuers in both of those different jurisdictions. I think what we have to remember is just because a country has lax regulation doesn't necessarily mean it's a good place to invest. And so just because Botswana decides to have favorable regulation doesn't mean we're gonna necessarily have money flood there. So I think it depends on both who the players are in those countries, how supportive the government is. Because for example, if China has favorable environment, you don't know if the government will just take over at any time, right? So there's a lot of factors beyond just favorable regulation.
Yeah, early on in the ICO boom of 2017, 2018, you saw certain countries stepping forward and trying to take advantage of the market. So they could, put a flag in the sand and say, hey, we are friendly, come operate your business here. So I think Malta and Gibraltar were two names that came out a lot. On our side, we don't actually see a lot of projects that we work with setting up shop there. I think it might be a little bit more on the exchange or infrastructure side that you see companies setting up in those jurisdictions. Echoing some of the points that were brought up, Asia continues to advance things and have a forward-looking lens. I also think there's a little bit more honesty in Asia around cryptocurrency in general. In Western markets, I think we take a more conservative viewpoint on crypto as an investment or asset class, whereas in Asia, I do think they view it a little bit more as a speculative market and are honest with how a speculative market might be able to operate.
Yeah, when I first got into crypto 3 years ago, I was on the trading floor at Barclays, and at that time, the US had kind of taken a strong stance against blockchain, and there were strong regulations. And at Barclays, it was one of the biggest banks that was involved in crypto at that time, one of the very first banks to kind of get involved. But everything was being done in Europe because there were sandbox regulations there. And I kind of wish that the US would have taken a similar approach, kind of how we did to the early days of the internet. We were very welcoming. But yes, and I would say in Berlin, it's very layer one focused. A lot of building is happening there. I think a very large percentage of blockchain building is happening out of Berlin. Singapore is very big on STOs. And we saw China's government just announce that they are pro-blockchain and actually banned calling blockchain a scam. So it's definitely been very interesting to see that evolve. And in Japan, they used to be very welcoming of blockchain and crypto, but since a few exchanges were hacked, they have actually pulled back and they've stopped allowing any issuance of any any tokens on Japanese exchanges until they kind of get a grasp around the regulations.
Yeah, I think, to Andrew's point, that just because a jurisdiction has favorable regulations does not mean that investment will go there. And as Mike mentioned, Malta, Gibraltar, kind of early entrance into that regulatory arbitrage, we'll call it, where they try to attract business by having very favorable regulations. The thing that I think we've seen, however, is that after Malta and Gibraltar, we've seen some actually really legitimate jurisdictions say, look, what we want to do is we want to create a sensible, realistic, kind of reasonable framework for regulating the space in such a way that doesn't stifle innovation in the space. And so jurisdictions I'm talking about are Switzerland via their FINMA regulator, Singapore via their MAS regulator, even the FCA in the UK, which they are thinking about security tokens, but they're also really showing a posture of wanting to provide a framework to innovators and entrepreneurs to be able to issue something that they believe should behave differently and operate differently than a security. And I think it's really important for regulators who have carved out that space. The FSA in Japan is also thinking about how to draw clear lines between digital assets that represent securities and digital assets that themselves are not securities. And we're seeing the same thing happening in South Korea, Cayman Islands, some other jurisdictions. So that's really important that regulators around the world are actually thinking about the posture that they should take to promote innovation. And I think that that's kind of the stark distinction that we have in some of these foreign jurisdictions versus, our regulators here in the United States, where, look, they're doing their job and they're trying to do it the best they can. But the signaling is not always welcoming in kind of the, that sense of the term to innovation happening. And I think that is a real friction point for innovation here in the States, and that's unfortunate.
Well, all right, let's bridge into perhaps another friction point, which is Libra. Facebook, of course, is launching its own Libra cryptocurrency, but a sidebar to that story is that it's also launching what they're calling the Libra investment token, which is basically equity in the Libra project. So it's only available to association members. No one is really sure exactly what the plan is going to be after that. Is this the kind of model that you think is going to affect future cryptocurrency offerings, what Facebook is doing? They're a big player in this market, and they could really set a tone that, or take this in another direction. So I'm curious to get the panel's reaction to what's happening with Libra. Megan, you want to start?
Yeah, sure. So I think kind of similarly to what we've seen with Telegram, Libra, the centralization of power is not clear. Obviously, it is very centralized because you do have to be an association member in order to profit off of that investment token. That's coupled with the Libra stablecoin. So, like I said, I kind of look for, is it decentralized? Is it open source? Is it permissionless? And when you look at Libra, it's not any of those things, though I do think they did open source recently. It's also important to note that it is coupled with the Calibra wallet, and that Calibra wallet is owned by Facebook. So in my opinion, it's kind of like a 360 surveillance coin, because now not only do they have your personal data, they also have your financial data, or will have it.
Yeah, as it relates to the question around, will this be a new model for token projects or blockchain projects moving forward? I do think that what Libra or Facebook has introduced is going to happen moving forward, especially for any team that's trying to do things the right way. So they had said, hey, this is a security. It's going to operate as a security. It will operate within the network, and only accredited investors can purchase it. If there was an opportunity for kind of the global audience to purchase it, but at least for the initial node runners. And then there will be a stable coin that is separate from that. Where projects in the past have run into trouble is where they've tried to sell the investable asset as a non-security and just as a utility token. So you might remember a project called Basis. They went out, they raised about $100 million in early 2018. They shut the project down after a year because the bearer instrument, or the secondary token, they couldn't get around the fact that it would be a security, and they didn't think that their network could function without being security. So, Libra is trying to do things the right way in terms of introducing this two token model with one of them being a security. And I expect more teams to do that moving forward, where they're okay with calling one of the tokens a security.
Yeah, on Libra, I think we were very curious to see how it would all kind of pan out. Kind kind of good or bad, I think it's pretty incredible that one of the largest companies in the world, and the one that undoubtedly touches more individuals around the world than any other, would kind of so specifically enter the crypto space by providing kind of a digital asset that it intended to use for payments. So I think that would have been really cool to see, maybe will be really cool to see if they launch. And so I think in terms of touching individuals who are unbanked or underbanked, but have access to a smartphone and Facebook, it's a very interesting experiment to see how that brings crypto into kind of the knowledge of a greater majority of the global population. Libra is Libra. It's as Tika mentioned, it's open source, but it's not permissionless. And there's kind of this governing structure. The Libra Association currently has 21 members. Hopefully expand to 100. That's going to be like quasi-decentralized. They did mention that they hope to kind of completely, make it permissionless in the future, which would be great to see. But it's just hard to project out 5 years to something that is fairly centralized right now. But look, I mean, I'm sure you all saw at least portions of the hearings with David Marcus and Mark Zuckerberg. I think more than anything else, the political backlash against Facebook is going to be really difficult for them to overcome. There's also governments in Europe that feel particularly threatened by it. Ultimately, Facebook is about threatening kind of a sovereign monetary standard for the U.S. and for other countries, and that being a privately created thing rather than a government issued thing. And so I think we're going to see some interesting geopolitical, back and forths on that subject, and that's kind of really where it'll be interesting on the macroeconomic level, more so than on the crypto level. And hopefully crypto kind of just continues doing crypto, kind of in the background, and then, when it's too late, crypto's ready, and, we've been squabbling about, national currencies and, Facebook's Libra coin.
Andrew, do you have something you want to
Sure, I can. I think the vision, so I think the original vision of tokens was that so the community could have aligned incentives with kind of the platform. And historically with Facebook, with Twitter, these have been incredibly centralized, and initially the people on their platform have aligned interests, but once you kind of progress and mature, you become in competition with each other. And so I think the original vision of tokens was to allow everyone to be incentivized towards a common goal. And so when you're purely talking about the fact that they have offered this kind of equity or investment token to their community is a positive thing in that direction, but I think we have a long ways to go.
All right, we've only briefly touched on it tonight, but I do want to ask the question about security, because so much depends on the blockchain. Although it's not a huge problem, there have been instances where the blockchain has been hacked. We've seen that. Should investors be concerned in tokenization and whether the blockchain is secure enough to handle the models that are being rolled out there?
I would just say, so the Bitcoin blockchain has only been hacked once, and that was when Satoshi was still around and he fixed that hack. The Bitcoin blockchain has not since been hacked. What has been hacked are third-party kind of toll collectors in the space, which is what Bitcoin was created to kind of remove and eliminate, to give yourself sovereign ownership of your finances. So if you do hold your crypto on a third-party exchange, for example, then you are potentially subject to their security limitations.
Yeah, the initial crypto networks, Bitcoin being the first example, were the security is based on the network valuation. So as long as the network valuation is going up, there's markets participating, Then you can ensure security. If you've audited the smart contract or you audit the blockchain, you'll be able to rely on that code. In the case of Libra, I think at least initially, you'll be relying more so on trusting these individuals as opposed to trusting code. So that'll be the kind of key distinction between the two. And if there's anything that this industry is moving towards, it's the idea of trusting code and not having to trust certain individuals or organizations.
From a Harbor standpoint, we got started because our chairman was raising a venture fund and he wanted to tokenize it, but he realized that the biggest barrier to being able to tokenize was the lack of compliance infrastructure. So our entire platform is centered around automating compliance. It is more centralized, it is more permission-based, but the whole point of it is so that we do bring that oversight to the infrastructure. So I would actually say it's not more risky. At all times we know who, what, where, when, who owns the token and whatnot. And it can't exchange hands until people have gone through the proper compliance. We also store all the compliance information off-chain, and what you can see on-chain is really the number of wallets, the volume of activity, but you can't see any of the compliance information. So don't really see a concern in that sense.
Of course, so that's the kind of less interesting kind of security case, right? Because you guys are centralized entity. If somebody does something kind of nefarious on the chain, you can unwind it and whatnot, which is a benefit of kind of having your infrastructure, but a benefit particular to kind of non-bearer assets on the blockchain. I think if we're thinking about actual security of digital assets that itself is intended to maintain value as a bearer instrument, there is concern like, what if somebody steals my Bitcoin and I literally in the physical sense, digital physical sense, cannot get it back. So there is a concern. I think what Mike said is, when we have chains that have distributed nodes and enough of kind of a network valuation to make certain types of attacks on the actual assets of the network difficult, then you worry less. Google apparently just cracked quantum computing, and so there is a question as to whether that could create a situation where assets secured by kind of a blockchain type network via blockchain consensus could be put at risk. The market cap of Bitcoin is 160 billion, so I don't know, if you really want to use quantum computing for nefarious purposes, maybe you would, hack a country with more money, or get access to a significant portion of the world's population. But look, any new technology is going to introduce new risks. If you can hack a blockchain, you could probably hack, Sony or Citibank or Equifax or Experian. Which one was it? Equifax. Right. So we've seen people lose valuable data and other kind of assets to hacks already. And so I don't see blockchain as a outsized risk toward the risk that we kind of experience every day in the jungle that we live in out here, right? I think we're all kind of iterating and developing, and as we develop new technology, there are going to be new ways to attack that technology, and then other entrepreneurs are going to find new ways to protect that technology. And so the important thing is that we have the freedom and the ability to, and that we are able to encourage, in our case, deploy capital to help people continue to create and build in this ecosystem.
Yeah, and I will add, the reason Orchid was actually born was because my CEO, Seven Waterhouse, got SIM swapped, and someone kind of tried to take his identity, and thankfully they didn't get any of his crypto, but he wanted to kind of protect other people from experiencing that. So yes, so the decentralized VPN was born, and you can hide your ISP, which hides your data, which helps privacy.
Joshua, you mentioned the Sony hack, and let's hope that at least from the Bitcoin or blockchain perspective, no one does what they did, which is to put all of their passwords in an unencrypted file labeled passwords. Not a good idea. All right, so we've had a lively discussion here tonight. We want to give the audience an opportunity to ask some questions as well about tokens, the state of tokens, any of the subjects we've talked about, or perhaps some others. So who wants to go first? Who has a question? Who has a question tonight for this panel?
So my question is for Joshua. Can you talk about why Blockchain Capital decided to launch a tokenized fund, and if you recommend it to other VCs?
Oh man, I thought I was gonna be able to avoid that question on this panel. I'm just kidding. Look, the why is really interesting. So we launched we issued our tokenized fund. So let me give a little background. So Blockchain Capital has 4 funds. 3 of them are traditional venture capital funds. One of them is a tokenized fund that is kind of like an evergreen, kind of operates as a kind of closed-end publicly traded fund. And we launched that in April 2017. Projects were launching tokens. ERC20 was a thing, and people were creating tokens on the Ethereum network. And we were a part of the ecosystem, and we wanted to participate in the same way that many of our portfolio companies were participating. And we actually thought it was a really interesting opportunity to disrupt ourselves, disrupt the venture capital industry by democratizing access to a venture fund. And so, we were particularly interested in the type of secondary liquidity that a tokenized fund could add to, accredited investors. But when you invest in a fund, you have to be a high net worth individual, a pension fund, an endowment, a fund of funds, right? These are kind of very exclusive groups that get to invest with venture capitalists. And so for us, it was really an opportunity to kind of put our money where our mouth is and kind of do the type of innovation that we're also supporting. Would I do it again? No, because it was terrible. I mean, it wasn't terrible, it was great, but there's so much work that went into it. I would do it again maybe in like 10 years when Harvard and Securitize and Tokensoft figure it out and everyone just wants to hold tokens as representations instead of stock certificates, right? Then it's when it's normal, it's normal. I am glad we did it though. I mean, we kind of blazed a trail and developed some really technical, very particular expertise on the tokenization front. And it has helped our regulatory practice tremendously.
Okay. Over here.
One of the hopeful promises of a security token is the notion of liquidity, aftermarket liquidity. And I wonder if there's a viewpoint on constraints around liquidity when you have an issuer that raises a relatively small amount of money, like Blockchain Capital Fund. And what does liquidity really mean in the real world?
Go ahead.
Yeah.
So that's something we've been working on at Harvard. I think when security tokens came out, it was kind of a pipe dream of, okay, this is what's going to happen. People are going to knock down on doors and try to buy these secondary the secondary anywhere they can get their hands on. And having spent the last year working with fund managers and asset managers that have real assets, that have existing investors, we've really come to figure out what they value today around liquidity. And so I spend my time talking to these fund managers, and they have a number of different types of funds. They're open-ended, evergreen. They provide, specifically in real estate, they have a lot of programs around liquidity. Some provide redemptions. They have 3 to 5 year lockups and whatnot. Some are evergreen, so you can come in. And I think what we've learned is these securities are never going to be traded at the high frequency of like a Bitcoin or a public equity, and they require slightly different, they require modifications to the the ATS that's out there or whatnot. So what Harbor has done is we built a private marketplace really designed to put the fund manager's mind at ease so that they initially start with more control. So there isn't public price discovery. It's more like a sandbox where it's a bulletin board. They can match buyers and sellers. Not everyone can see that bulletin board initially. It only is viewable by the broker-dealer or the issuer themselves. And the very real use cases of liquidity that we've seen today is that when you deal with, for example, more high net worth individuals as your investor base, there are just bound to be people that need to get in and out for cash flow reasons. The second thing is people are doing transfers already around death, divorce. A lot of people move their money into trusts for tax reasons. So those are very real cases of liquidity. Another use case that we've seen is specific around debt. A lot of times these instruments last 3 to 5 years and people will extend the maturity date multiple times. This also goes for funds. And so anytime you do that, investors will want to get out. And so the fund managers that have seen value in the liquidity have also had these scenarios where they want to continue to extend the life of their funds, but honor the fact that people need to get out. So those are very real use cases around liquidity, and we're facilitating those transactions already on the blockchain.
Yeah, only thing I'll add is that I think the lack of liquidity that we've seen or kind of liquidity that you as a kind of a purchaser would want to see, I think a lot of it is due to the nascent nature of the industry. Tokenized assets is not something that your everyday person is familiar with. You're like walking on the street, so like, hey, would you like to buy a token that represents a limited partnership, a fraction of the limited partnership interest in a venture capital fund that invests exclusively in blockchain, companies? And like, what are you talking about? Please never speak to me again, right? Like, part of it is just like, security tokens are kind of recreating the capital markets infrastructure kind of from the inside out, and it's going to take time before mature markets form around just even the way in which we hold and trade those types of assets. In our case, we can't have more than 2,000 holders of our token, because after that, then we have to become a publicly reported company, and that's fun for no one, right? We don't want that. But we do expect that as the industry matures, people are going to become more familiar with the concept of tokenization and become more comfortable with handling tokens. And hopefully that will create more opportunities to democratize access to these types of assets and greater liquidity in the future.
I do think at some point people will also, from a marketability standpoint, if you don't allow that option, people will not invest because it'll become commonplace at that point.
That's the dream.
That's a dream, yeah.
Hi, my name is Igor Mel, the founder of BankX. We made those one of the top 20 global initial coin offerings. And I'm also Stanford guy. I'm probably the only one Stanford is being who did it. So my question is, we spend a lot of time all over the world or doing helping clients also offerings, and I found out that just unfortunately initial assumption was that a security token is supposed to get a premium to the value because of the liquidity premium. But because of the token and because of the SAC, because all this bad mouthing, basically it became discounts. So the people kind of want to stay away, and that's why I see right now the market two types. Like when the guys trying to do this closed loop, like Warden Garden, like they get transfer license, broker dealer, and build token space. And from another side, there is guys they just kind of hide away the blockchain and say this is electronic REIT, real estate investment trust, or this is one figure is doing HELOC and blockchain provenance on the back. So and looks like the second model it's more easy to sell. So because of warehouse financing, there is those guys who can buy it. So do you think that the people kind of change their mind and they will really invest in tokens? So it's better to or do you consider to switch the model and to kind of hide away the tokens side?
really a market question, so let's go ahead, Mike.
As far as security goes, people are investing in assets. Calling it a token, calling whatever the instrument is, really doesn't matter too much. You want to invest in high quality assets that you think you can make money. So I think Figure has done a great job of abstracting away the blockchain and not making that the sell point of why you should invest there. My expectation is that more people would. For a time, putting blockchain in front of something allowed you to increase the valuation or increase the price that you could charge. That's no longer the case, and so it just really doesn't make that much sense for people to understand all of the underlying technology for how something is traded or settled. They should just want to buy it.
When we work with clients, they come to us with their private placement memorandums, which has all the offering details, and we usually have them just add a clause around transferability. And so what blockchain is doing is not, like you said, altering the underlying investment as a security token, but it's enhancing liquidity. So we like to say it's electronic wrapper around the previous security. And what that does do is actually makes it more marketable to investors, because a lot of investors turn down these investments because there is no exit. It's a 5 to 10 year hold-in period. And so just that potential makes it more interesting for investors. So it doesn't necessarily kick up the price, but it makes it more accessible as of now.
I just want to add on that, yeah. So I think transferability and ownership are two of the really, strengths of security tokens. If you look at the financial crisis, I don't think it would have gotten that bad if we understood who owned those bonds and were able to actually transfer those bonds. So I think that, this is a really strong point and argument or case for why security tokens are valuable.
All right, I believe we are now finally out of time. I'm sure the panelists will stick around for a couple of minutes afterwards to answer any additional questions you have. But please, this has been a great discussion tonight. You guys did a terrific job, so congratulations, and please give our panel a warm round of applause.
Thanks so much, panelists, and this is run out of battery, is it? Yeah. The mic problem tonight. Okay. Well, thanks so much, everyone, for coming. And did you want to come and say a few words, Bill? Or?
No, just,
you're right.
thank
well,
you
thanks
for,
again for hosting. Really appreciate it. Yeah.
Thank you.
So we've got half an hour if you want to network and talk to the panelists. This is your chance. Thank you so much.
Thank you.